recording. Does that thing? Okay, we're recording. So
Right. You've disabled participant screen sharing.
oh, sorry. Okay, you should be good.
Nope. Find the right screen. Just switch to my wife's computer, which is why I'm showing up as Shannon Mayer in the Zoom call.
Perfect.
Okay. See if I'm. Okay. So what I was going to do was go back to very basic structure and show you guys how I use structure for either confirming the market maker entries and or for setting my TPs, and especially for setting TPs and even confirming entries. For me, it helps a lot. It gives me an idea of where the entry or the exit is most likely to be based on structure, because the market maker guys tend to just go for, let's just go for 50 pips or go for 30 or something like that. And they say, well, the M or the W can come anywhere between 25 and 50 pips from the A range. And that video you posted yesterday or a couple of days ago, Ty, the guy was saying it was actually 25 to 50 pips from the middle of the A range or the middle of whatever or the New York or something like that. And so there's definitely some differences of opinion as to where that strike zone kind of is, as well as using the RSI. So I will pick, does anybody have a pair that they care about in particular? I'll just wipe out everything and start from scratch. Do you guys want to do your GN or?
Yeah, we can do that one.
Yeah, it may as well.
Now, the interesting thing here, I've signed in, but it's not showing that I have any. So maybe that's it. Here we go. So I have a couple levels up for trading view. So I have access to multiple screens like this, and also for a whole bunch more indicators. I probably don't need as much now because I'm using a lot less indicators than I used to. And sometimes, other than looking at the RSI for a strike zone or like Ty said, crossing the liquid 50 or something like that, I tend not to pay that much attention to the RSI. So here's our GN friend, and I am going to wipe out everything. Okay. So when I start with a brand new pair, and I did this a long time ago for most of the pairs that I watched, and then I just updated on a like the 4 and 4 hour and 1 day levels. I only update probably every month, because they generally don't change that much, especially historically, unless there are some new strong daily levels or strong 4 hour levels have been created. They don't change that much. So sometimes you get minor adjustments, but that's it. So if I turn off all if you have any generic trading view questions for what I'm doing, go ahead and ask. So starting out on the daily, I would usually get rid of the candles. And then I'm just going to start looking for zones on here that look fairly strong on the daily level and start putting in some levels. So up here, change that to a daily. There's a zone in here. So what I'm looking for is multiple touches on that same area. So here from the daily, Now, if I take a look to see where the candles are, there's lots of touches along that line. Sometimes I go back and I'll remove some because I think that they're just not all that valid. If I look at something and it, like this chain going up here, primarily it's going from here to here, and all this just kind of incidental stuff in the middle. So I've seen some people mark up and put a daily here and one here and one here and one here, and end up with just so much clutter that it's just fundamentally not very useful. So I'm looking for the big zones across here that have lots of touches. Now, obviously on the 15-minute entry, that zone there could be 50 or 100 pips wide where all these touches and ends of the candles and all that kind of stuff are. So it gives me an idea of roughly where those zones are when I'm working down on the 15, and then I'll refine it as I go. And then let's look at another one, probably in here. Get a touch there, touches here, sort of there. We open that up a little bit. There are a couple of touches. So on the daily for GN, that's probably enough. We can see on the daily that it's basically been trending in this, what is that zone there? So GN's been trending in a 300 pip zone for the last X number of years. So it, on the whole, it doesn't actually move that much. So I usually try and keep my drawings somewhat organized because I turn them on and off because I end up with pretty messy drawings, as you've seen sometimes. So I'll just create a group for those, and then I can turn those on and off depending on whether or not I want to look at them or not. So those are my dailies. And then I'm going to drop down to the 4-hour, and I'm going to look for a couple more zones at the 4-hour level that make sense. Let's throw one in, probably in here, because we got multiple touches along this area. Change that to a 4-hour. Probably one in there. So it touches here and here, a bit of noise in there, kind of in this area. What I generally find is that in between any two daily levels, there are 2, maybe 3 valid 4-hour zones. Anything more than that, you're just getting a lot of extra junk that's not that useful. So we go back and stay relatively recent, and I might stick another one in kind of this area here. And you could put one down at the bottom here for a major 4-hour reversal, but that would be the maximum I would ever put in there. Four-hour, lock those up, and then I can turn those on and off.
I didn't even know you could do that with the drawings.
Yeah, I have a background in CAD for a lot of years, doing IT projects. So it's a very common thing where you can take
drawings on and
basically
off.
all the layer concepts. So you can turn all of these on and off. So it's very handy because, like I said, I sometimes get very cluttered drawings and I just got to turn crap off. And that way I can keep all my historical stuff and I put that in another category and I could turn it off for what I'm doing right now, especially old PSR zones and that kind of stuff that just end up covering the whole entire diagram after 3 weeks. So I just turn the old ones off, but I can turn them on to go back and do back testing if I'm looking at stuff to see how everything turned out. Because I also keep all my old trades all marked up on the chart, so I can go back and look at my trades and see what worked and what didn't. So now I kind of have what looks to be the major reversal zones, and on the 4-hour, actually I'm going to stick one more in there. Just because that looks like where we're at right now is a fairly strong level. Let's drag that in there. And good. Then I'm going to go down to the 1-hour. And I do the good old Jeff Money Making Kirkland, Candle Wick the Body. So I'm going to start looking in my major zones to see if I can find something in there that is cutting a lot of different locations. So in here, when we're looking at this, when you see all those yellow ones, I'm usually building those short term because they don't necessarily hold a lot of water longer term. So in here we had a zone kind of in there. I'm just going to drag that across. That's kind of temporary. So we can see we have touches here, it touched here, went through, came back, rebounded off of it, came back, rebounded off, went through, has rebounded off. So this is a relatively strong area, at least on the hourly. And sometimes as a couple of weeks progress, it might change it. So because the bounce here recently was at this level where the wicks are, and here, then I'll move it here. So it's not quite touching this one, but it's still got the majority of them. And again, these zones, as we all know, they're not perfect. So it's getting close. So I know that it's reasonable what I'm looking for.
Yeah, that one there's the one I was in there on that retracement right there before it dropped.
So you guys got in that entry down here, and I had suggested a TP of right basically at this level, and that's kind of where it went the first day. So if we turn on the so that's where it ended up right in here somewhere. I think I had another, I had another zone that I had put in here. Because we had a little bit of a touch here, a touch here, a touch here. So it's kind of, if it breaks this zone, then it's going to keep going and it's going to end up here. And it kind of paused there for a little bit, I think on the 15. Actually just blew right through that into the next day. So here was our likely, again, another take profit level, because one, this is a 4-hour zone. So this is a strong resistance area. And if we do the wicks to bodies in there, and then go look back a little bit more. I don't usually draw these on the 15-minute. Sometimes I'll just put a single line on the 15-minute because I like the hours better. It gives me a little bit bigger range and usually a little bit safer for TPs to worry about it. So now I can look at this and knowing that this was the big entry, this was the news event that happened down here. And looking at historical levels, then I could have said, well, based on structure, there was a bit of a hiccup in here. We had this, so it's going to go probably to here. If it breaks this level, we've got another level over here. If it breaks that, then I'm starting to look, get back on the 1 hour. Missing all my keyboard shortcuts. So looking back, so assuming we were coming down here, we didn't know how far it was going to go, then another potential logical area was in this zone here. And guess what? That's exactly where it got to, was in this eventually. Now, it did take another full day of faffing about in here, didn't really do anything, but it did eventually bounce off this level here and start to take off. So you can see when you take, where did all the EMAs go? I turned them off. Not that one. That one. Where did my EMAs go? Something's obviously completely different with a different computer. Okay, those aren't the right colors, but I'm not even sure those are the right numbers. Strange. So obviously something about TradingView is on a per computer basis. 5, 13, 50. $800. It's enough for Blueberry. Okay. So on the 1 hour, we didn't really get a touch on here, so that was a difficult entry to predict, other than knowing that this here was likely our peak formation. So when I'm doing, so now I have my basic structure, because this was a daily level. See how I just exactly pinned that there on the 1 hour? I would have gone back and started looking here when this was climbing. I'm always looking back to see what else I have. So if I had picked a zone in here and this was a fairly big, strong historical zone, then I'm going to put it on as a permanent kind of support zone that just stays there for a long time. These ones here, the yellow ones, they're kind of temporary. They don't necessarily hold water back past 2 or 3 weeks or something like that. But these ones like this here is another big, strong one. So I would have another permanent zone here. And to set those so that they extend left and right, it's just these 2 buttons here to make sure, because otherwise you just got a rectangle, or you can turn that into a infinite left and right just by adding those 2 check boxes. So now I've kind of got this whole space charted out from a structure perspective. If I'm looking to see how strong something is, you know, like this one, I can actually take that all the way back here and go, yeah, it has some validity back in that area too, because it's had lots of rejections off here, close in here. So I might go bring that up just a little bit, bring that up a little bit higher. But again, it's just a general zone of interest that I'm looking at. So that gives me a way of, one, confirming my entries. So we had a 4 hour here. There. So that's probably pretty close to what I actually had before I started with something like that. So in terms of basic structure and what Omar would be looking at, is we had a break of structure. We rejected another structure, went back and retested that fairly strong zone at the 4 hour. And on top of it, for market maker, we would have been looking at, this is likely the peak formation. Whoops. Smaller here. That zone in there, so 160 times 3, so yeah, we're in the ballpark for 3 times ADR. Levels then I'm looking at on the 1 hour in terms of, sorry, that's the blender doing, setting my levels. Normally, I like to see a level come back to the 50, but when you get this kind of a strong push, you don't usually get the luxury of having a touchback on the 50 on the 1 hour. But I try and set all my levels based on the 1 hour. Now that's 560, 1, 2, 3, so 450 would have been. So we're kind of extended an extra one. So this is a bit of a toss up as to how you're going to put your levels in there. I know, Boris, you have that indicator that helps you figure out what a new peak formation is. I was curious, curious as to whether or not to pick this as another peak formation in here, because it's a fairly strong impulse.
I think that would just be like a Mayo bounce. That's kind of what I would refer it to. But
Yeah, a safety trade potentially coming back that far. So, you know, potentially this is a level in here. This is another level with a big retracement coming in through here. And then you've got your third level coming up in here, starting to look for your midweek reversal. So on the 1 hour, we're definitely in the strike zone because we're up in this little 63 to 67 zone. And we can see that at least on the 1 hour, not every time. Here we just got a little retracement and then it took off again, kept going. But we can look at peak formation here because we were probably looking for it in here also, and even down in here. So this whole time it made multiple attempts of trying to get off this area before it finally took off. So for me, what I've noticed is when you're in this kind of situation, if you're expecting it to buy, basically keep taking all your buy signals until it finally goes. And sooner or later, one of them might actually break and this could continue down if this was a long-term trend. So you're going to lose one of them. But based on everything I've looked at so far, if it's in a consolidation sideways zone and this kind of crap here, you're looking for a buy here, you get up, maybe you take a bit of profit or not. You look for another buy here, you get some profit, it comes back down again, you look for another buy until finally it takes off or gives up and heads down and breaks this and goes in the opposite direction. But now I have basically my levels. So my bias here is this is peak formation high, and I'm looking for a drop. So again, I'm looking for the distance here, 1, 2, 3, so 450, 60 pips somewhere in there. So I'm going to redraw this just to give me a potential idea. Whoops. So this distance in here is reasonable for a 3 times ADR because it's never exact. It's a little bit more, it's a little bit less. Rare occasions, it's pretty close to bang on, but we're looking then at, here's another small level in here. And another one here. And we got that big news event that drove us down into here. And I think I said the other day, again, these midweek reversals that are actually doing a big reversal, they tend to be pretty messy. And sometimes we get what they call this extra stop hunt down in here, going a little bit further than what you had expected, which is what happened to you guys here, trying to anticipate that drop in there. So you might have got a signal on the 5-minute or the 15-minute, but on the 1 hour, it was already all the way up here.
you know it's going to
Going
continue up.
anywhere.
Yeah, and
Be-
plus you also had your EMA cross there too to confirm the
Yep.
buy.
Exactly. So if you're waiting for an EMA cross on the 1 hour, you're waiting until all the way up here. So by the time you got up here, half or 2/3 of your move had already been eaten up. So that's why the MM guys are trying to use candle patterns down here. So this was obviously a huge engulfing pattern. And these patterns really only work if they're at an expected reversal or bounce zone. If they're in the middle of something like here, you find an engulfing pattern in here, it basically means nothing. If it doesn't, if you don't get your morning, evening star or your doji candle or your big pin or something like that at an expected reversal zone, then basically ignore it. And that's helped me a lot of times in not wanting to panic on a reversal here. There wasn't much of a reversal, so this one was a lot easier on the hour to ride it up. We're looking at the, even in the 15, it touched the 13 a couple of times, but that's it. So this one, if you're going to stay glued to the charts, this one was a relatively easy one because it never really crossed over on the 13. Even here, stayed pretty consistent as it went up and up and up. So it was just kind of bouncing around the liquid 50. The Bollinger Bands got pretty compressed. So basically it's just not, it's doing a little bit of movement, but it's staying pretty consistent. So that angle going up here is still pretty straight. Nothing's really changed.
One thing also too is you also had your Aqua and your Mayo Cross too. So one thing that I do is even drop
Right
down
in
to
here.
yeah. So actually, if you drop down to a 5-minute, you can even get an even better entry. So when you see those EMAs shift, especially the Aqua and the Cross there, right at the bottom there, if you go all the way to the bottom there, yeah, that's so you know that locks in a buy, and as long as it continues to bounce that Aqua
Yep.
on the way up, you know you know that you'll be able to hold that buy.
Yeah, this is your 513 cross on the 15-minute.
And then you have your 5200 as well. Confirm it.
Yep. Yep. So now that I don't know, the IML guys, when they kept talking about all the different crossings and what it meant on the higher time zones, it just never ever really registered in my head. It took a long time to get that through, but now I look at that and go, oh yeah, well that's the 1350 cross on the 1 hour. So now we're locked in or pretty good. So here on the 5-minute, we got to touch back to this, but it's 5 minutes, so the 5-minute trend is a lot weaker.
Mm.
But I also, I'm relatively careful on how I set my level boxes because I use those as zone areas too. So I'll pick the actual, when I first get a little bit of a zone, so I'm going to set it to the top of the closing and the bottom of the closing and use that for a bit of indicator, because it's basically those are two more tighter zones in here. So we can see here we got that little stop hunt down and went up. We got a little bit of attempt here. So there might have been an entry. You could have potentially entered here because we have these two little spinning top, almost doji candles. And then, so here's an example of where the railroad didn't actually do anything on the 15. But even if you had entered in here, with say, my standard is 20 pips. So I can't use 20 pips on GN because my broker doesn't give me enough leverage. And because it moves a lot, 20 pips isn't much on this one. But so if you had taken the entry right at the top of that when you got the cross and given yourself, probably you would have had to give yourself 40 pips.
Mm.
You still would have had a valid entry because this one dropped and it kept, but then it kept going. So even with 40 pips, by the time we got up here, we still had a 5-to-1 return on your risk to reward to get up there. So me, I'm setting my TP up here for the extended one, because in this particular case, I'm looking for it to refill this whole entire news gap or whatever that was. But what's the most recent, if this is truly a reversal and it's going to head the other direction for 2 or 3 or 4 days, then I'm looking for the next most likely place for it to get to. In that case, that was along this area here. Now I added that other support zone, so I'm just going to get rid of this. Oops.
Which is almost like a teacup on a really higher time frame.
Exactly. So that one I'm going to get rid of. I don't need it because I have this wider green zone there. So I'm looking for that. Sorry, the other thing that I didn't do from a basic structure perspective, which helps me with trends. Oops. Is if I drop. Let's get rid of the candles. All this extra crap. That's hard. I don't have that. Let me just this a little bit easier for a sec. That's for a good technical term. Turn off. EMAs because they're in the way. So I think Jeff used to do, he always did it on the 4-hour, which I thought, Christ, it's going to take 10 days to get up to that level before it does anything. But I would have put a 4-hour channel in this area. And been using that just exactly the way that Omar uses his structure when he's got a trend line coming up here. But I like the channels because it gives me a top and a bottom once it establishes a reasonable top. So I may have actually had that in here probably for the first while as it bounced around in here. It did get up to the daily, but then it came back in again. So if it's punching out of there, I don't worry about it too much. And it, you know, it's come out, but it hasn't substantially got out. So I might look at, again, we had a reversal. Now we're heading up in this direction. So if you think of it from good old Elliott waves, we're potentially just getting one big ass Elliott wave heading up in that direction, somewhere in there. So on a 4-hour chart, you'd be looking at your big level in here, another level in here. This would have been a reversal and this would have been a reset because it never, once it breaks the previous level, then it's either heading down or you're getting a reset to continue back up again. That's the difficulty that I have in predicting those resets because you don't know if you're getting just a retracement to continue, or you're getting a retracement and then a full reversal. Because if you go back to basic theory on this stuff, you've got, let's see, probably 1, 2, 3, and then you've got a ABC correction in there as far as the Elliott waves go. So that's basically all we're charting out. When it comes to market maker, we're charting out the same things as the 3 impulses on an Elliott wave and an ABC correction. And if it's a trending market, that ends up becoming a reset in here. And then off we go again, looking for it, for a new impulse. And I'll still even use my Fibonacci extensions here.
All the tools.
Yep. So I'm going to do this and say on the 4-hour, I'm looking for a target zone of somewhere up in this zone on the 4-hour. So all things notwithstanding, that's the trend that I'm looking for on the 4-hour level. So you can do that on any of your zones. So I'm trying to use everything. Market maker forces me to look at the levels, basically the impulses that are going through here. It's typically 3 impulses, which is the standard Elliott wave theory, 3 impulses, an ABC correction, 3 impulses. Here we got a big multi day, what is that? It's 2 W's before it finally took off. So once it hits that, you know, I think Steve says 3rd time, take it to the bank. So we actually got 4 there. So by the time it hit that 4th one, we're heading off. Now, if this had been, if this area here had been coming down and started to look more like this, then I would have been expecting more likely a breakthrough. Why? Because this is a typical descending triangle pattern in Forex that usually results in a breakthrough at the end. But because this was fundamentally the same thing, then the expectation is more likely it's going to bounce up because you've already had 1, 2, 3, 4 attempts at it. So with a descending triangle, you're probably looking at a breakthrough. But because it wasn't really descending that much in here, it was staying pretty consistent. It's more likely the reversal that's going to happen. So those are kind of the things that I try and sort out that are always going through my head. Sometimes it makes me second guess myself. If we go back to the 1-hour now, turn everything back on. So now you've got an idea. So from a structure perspective, we're sitting here trying to decide whether or not we're going to break this. So market maker would say, okay, we've got another level in here. And Monday, we've got a new pattern coming in. So Monday, we had basically moved down. Thursday, we ended up finally on Thursday getting a reversal. If this is a trend market, then we're either going to get a move up and a bounce off here. So this could be Monday up, Tuesday down, Wednesday, Thursday up to here, Friday down to here. If this uptrend continues, then we're basically just going to stack the weekly cycle on top of each other as it continues to go up in that trend until you get a true reversal. And this whole thing, if this breaks to the downside, if we get another rejection here and starts to the downside, then we're probably more likely going to be looking at, so this is a distinct possibility, is in the short term, because we have a channel from here, we got rejections here, we got rejections here, we got rejection here and here. So this is a big decision point because it's on the 4-hour
and the 1 hour.
zone. Yep.
So in all reality, it could go like either way.
Exactly. Exactly. So we've got some break of structure in here, bringing this down lower. We haven't yet set a high to get above here. We haven't broken this high. So Elliott wave coming back down. Making this as messy as possible. 1, 2, 3. So there's your 3 zones. Typical Elliott wave stuff. Messy, not equal, not equivalent. So if you put your Fibonacci extension tool on here, it wouldn't have worked too well, but this one got assisted by a news event that drove it all the way down, probably further than it would normally have gone. If that news event hadn't happened, we probably would have had a level in here, and we might have been looking for a reversal to head back up. Who knows? So again, adding in those extra little structure zones, the wick to a body stuff, just like Jeff always does on B, help me set my TPs. And generally, if you find one that's fairly strong, Fridays, you know, I'm gonna put, this was a fairly decent move on a Friday. After it came out of the Asian range, it didn't really do much of anything, but it did continue to move up from that. So you got basically half your move on day 1 and half your move on day 2. So the question is, how long are you holding for? What makes sense? Looking at the EMAs. So the EMA crosses are good targets for those BTS, the between the sheets ones. So once you're past here, then you're 90% assured of getting to the next EMA level. If it crosses that and you've got another one to go to, in this case, you don't on the 1 hour because the blueberry is down here.
That's exactly what I did. So
yeah. So you could go and say, okay, well, what's going on in the 4 hour? You go, no, the blueberry's down here. So once I'm past this, I don't have any averages to look at. And again, you have to be careful with the averages because they're what's happened in the past. The only reason that average rate there on the 50 exists is because price has spent a reasonable amount of time in the past. And look at that, at 50 EMA happens to be exactly where the structure line is that I've drawn it. So in the past, on average, price has spent a lot of time above and below that line. So it's been up here, it's been down here. So it's not surprising that the 50 EMA is there. So you have to understand how the math behind this, not the details of it, but the general concept. It's the same thing with divergence. Divergence is very easy to get led astray here. Look at this here, we've got 2 peaks. We've got equal on here, but in the divergence definition, that's not actually any divergence. All it's saying is that this last push had equal momentum for that second one in there. And also because the RSI is basically a measure of how far away it is from the 50 EMA. You can come up with this just by simply looking at the graph yourself. So how far away is it from the 50 EMA? So as the 50 EMA here moves, if price is moving up steadily and the EMA is following it, this line is going to go horizontal and it's going to stay there. And this line can keep moving up forever as long as it keeps moving up at the same general angle. At 50 EMA is going to stay about the same distance away from it. It's going to be running around here, and this is going to move across here forever. So that's why even once you get to the strike zone, we got to the strike zone here, we had an M on there, and guess what? Price is coming back up again. Now it's a lot lower, but price could just as easily continue in that same kind of general angle, in that same, where's my,
That kind of upwards trajectory. Yeah.
yep. So you've got that little channel in there. So Omar is going to be drawing a line from the bottom of this to the bottom of this, and he's going to wait for that channel break or to stay in there. So right now price has been fairly restricted in this little tiny channel. Guess what? It went from one side of this channel to the other. And this bigger Elliott wave impulse coming down here and up here. So we back off a little bit. Now you see why my charts get really messy and I need to turn stuff off. So Elliott wave wise, actually probably more like this. So that's just as valid an option as this is taking off and going up, down,
Bounce top side and continue up.
bounce, and up there. So when I draw these bounce points, I'm looking at here. So I'm looking at this little zone in here because I've drawn these pink lines basically at all my wicks and bodies for the most part. So I get to use those as kind of little support and resistance zones also. So the bottom of this one, so we broke the neckline of the M. So we were reasonably sure that that was going to keep going down in Elliott wave theory. Once you've broken the neckline at the top on your little ABC correction, and it's likely to start moving down. Make that a different, oops. Hope we're not so confused. So when you start overlaying the two, both the market maker and realizing that, at least for me, market maker is another way of looking at Elliott waves and impulses, or impulses and Elliott waves are another way of looking at market maker. So whether you believe that the market maker actually created this and the news was just invented to cover their move, which from my perspective is complete bullshit because they don't control the world markets and the banks. They're part of that infrastructure, absolutely. 98% of the brokers simply make money on their spreads. That's it. They're putting out the bid and the ask prices, and more people are buying, price is going to go up. If more people are selling, price is going to go down, in spite of what the broker's trying to do, because they're one broker out of hundreds and hundreds. So Steve and all the guys will say, "Oh yeah, when you get the changeover from the Asian range, they're going to pick up the phone and they're going to call the guys in London and they're going to make their decision about where price is going to go." And I go, no, bullshit. You've got thousands of brokers worldwide, both Asian and across the world. These brokers work across the world. They don't have 1 or 100 little guys picking up the phone and calling each other to make a decision on which way price is going to go. They're primarily liquidity providers, so they're buying and selling. They have their own pool. You got to remember that you and I very seldom actually trade currency between each other. We're buying and selling from the broker. They're the liquidity providers. In the equities market, it's more that the broker is actually going to find someone else who has those equities and they're willing to sell so you can buy. But in the currency market, they're simply providing liquidity. So they own hundreds of millions of dollars of US and Canadian currency, and they're trading it out, giving it, buying and selling it to you because you want to buy some. So they make money on the spreads. And yes, you have brokers that are manipulating spreads and doing all sorts of stuff. interesting FXCM, the broker I'm trying to set up my paid account with. They got kicked out of the US about 5 years ago because they were manipulating spreads and all sorts of stuff against their clients. So they were going out of their way to try and make their clients lose, so they get kicked out of the US. Since then, they've repaired their reputation and seem to be doing a lot better, but they're still not allowed back in the US, interestingly enough. But in the rest of the world, they're okay. Questions?
That was a really good. Oh, wow, I learned a lot.
So here's my total complete mess for NZD CAD. I was the one that I was trading, and I put out and said, if you had taken this trade, because we got our reversal down here, but you can see that I'm throwing all these channels up everywhere. So I've got a big 4-hour channel. So I know on the 4-hour in the long term, I'm in a downtrend. So I never really forget that. And I'm looking at
Yeah, that was really informative. I like that, especially on the structure points. It's something that I was felt like I was missing. I mean, I find structure is really good for finding like those really great entries instead of just waiting for a cross or whatnot. But I guess just depending on how.
Yeah, and I have a really hard time making a decision when I look at just pure structure. I watch Omar every morning and he says, yeah, this is probably going to do this and this is probably going to do this. And if my market maker hat agrees with him, then I might take entry. But because he's also at the New York session, I'm looking at it and going, yeah, it's only got 10 pips left. And often I'm right. It doesn't go very far because in the New York session,
It was like one time, I forget what pair he was selling. And then I was looking at the EMAs and I was like, we're in the middle of a downtrend. He had everybody buying, and I'm like, okay, I'm gonna sell. And then I ended up being right. So everybody else hit stop loss, and I hit like 50 pip TP.
Yeah, exactly.
Yeah.
So here's again another example on this one where I left all my channels up on this. Normally I would delete them, but I left them up because I knew we had this chat today. So I was in a downtrend here on the 1 hour, which is also coincident with my 4-hour trend, and it was moving down. I broke this structure in here, moving up. So then I'm going, okay, I'm looking for a new channel. Now it took me a while before I got this point to draw a new channel up here, but once it started to reverse, then I threw in this channel. Structure-wise, we broke this last peak formation high, so potentially this is going to continue up, but we broke this little channel. It's not very big. It was a week long in the big scheme of things, so not all that big.
And then it also looks like you also just completed like a BTS too, so it looks like you probably can put it down.
Yep. So I'm done here. And unless we get basically a 5200 cross on here, and we're at this structure point here, which is, it's a daily, because I've got an extra daily in there. I'd have to go back. I got to clean up all my daily in 4 hours because I got a couple too many in here normally. So I'm not really sure whether this one or this one or this one. Sometimes you really do get too close together, and then I just make that one big zone to pay attention to for reversals. So those two dailies might be reasonable because we basically got all this bouncing along here. And this is where I said before that when price starts to bounce like this, if you've got a downtrend on the peaks, then it's likely going to break through. If it's just going between the two from all the way back up to this blue line down to this green zone, then structure, it's a 50-50 as to which way it's going to go.
And then you also reject your 200, your Mayo EMA quite a bit there too.
Yep, exactly. So it's been staying underneath that for a long time until
that would continue to sell down until 52 MA cross reversal in the other way.
Yep. So this is one where I noticed on the oops, I just happened to notice this pattern on the daily. I think, no, it wasn't this one. It was another one. I can't remember which one it was, but it had all this consolidation on the daily, and then it had 2 or 3 days of big drop, and then it went into all this consolidation. Yeah, actually it was here, I think. It had a consolidation, it had 3 days, 4 days of drop, and then it consolidated. So again, basically just looking at levels or zones coming down in here, but the pattern was down. It had a bunch of consolidation, a big drop, a bunch of consolidation, a big drop. So I was using that to kind of try and predict where it was going to go. And in the end, it was right. I think it was in here. It didn't drop quite as much as I expected, but it had a bunch of consolidation. It did a big drop, had a bunch of consolidation, did a big drop. And again, from a Elliott wave perspective, it was just 1, 2, 3. And we didn't get a big impulse on the third one, but so the expectation there was we were going to get that drop. We got more of a retracement up on this one than we did here. But again, multi-time frame analysis looking for your big trends, and it was following that channel, that little green channel in there quite nicely for a couple weeks, 3 weeks, 1, 2, 3, 4, so a whole month almost it spent in that channel before it started to break out of it. So use everything. It gets a little bit messy, but sometimes it gives an extra little edge on what price might be doing. Because we're trying to anticipate, but not predict, which is what happened to me on Friday. I just can't stay away from fucking USD CAD.
You love your USD CAD.
I'm determined to tame it, but if I look back on the hourly here for USD CAD, I mean, isn't that just a mess or what?
Well, even if you go on the 4 hour, we've been in a downtrend for like a month.
Yeah, so USD CAD is generally downtrend. Yeah, absolutely. It's been in this green line here for a long time and in this blue one for months. But starting 3 weeks ago, it started basically this sideways trend. And I put in one of my posts the other day that we're at that $1.20 level. And the $1.20 level, it just wasn't my wife that said so, but it has historically been kind of what US and Canada can consider the sweet spot for the exchange rate between the two countries, given their economies. And we have two competing economies trying to build that are very, very tightly linked, and they're both trying to pull their butts out of the COVID problems. And I think Canada is now ahead of the US from a vaccination perspective, but I think the US has just kind of given up and thrown their doors open and said, do whatever you want. So from an economic perspective, they're both generally competing. Their numbers are job numbers and GDP numbers are kind of all over the place. The expectations haven't been met. The economists are not doing very good on the prediction side of it, but this is just a big mess. So there hasn't been any good cycles. You could kind of say this was a bit because Monday came out, dropped down, Tuesday and Wednesday bought up, Thursday came down, but then Friday back up again. Here, Monday and Tuesday came down, Wednesday and part of Thursday went up. But from an MM and a 3 times ADR perspective, it's not going anywhere. It's just a complete mess. So I made a prediction that based on structure, because I had this little line drawn in here, that it was going to drop here. So I put this in and went to bed. I had my TP up, actually not quite that high. I moved it up, shouldn't have. So I ended up losing more than I would have. But I went to bed feeling fairly confident that because I had kind of multiple taps here, but I also had this zone up here. So I had pulled my stop loss up a little bit higher just to give me some extra room. And I woke up and it had gone up and come back down and went, oh, good, I was right. And it actually dropped all the way down to here and then just turned around and off it went and then crashed back down again. So this day was kind of a waste, but I got stopped out on that because I didn't wait for any kind of price confirmation. I mean, look at that. There's nothing in there. other than this pin on the 1 hour, it says that it was potentially going to go up. And if I stick a line in here, 1 hour, and I can say from a structure perspective, look, ding, 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 rejection, and go. So that probably should have been my cue for getting out if I've been paying attention to structure. So it's another way that structure can help you decide whether or not it's time to get. So one, we crossed back above the 13. This was a big candle. So by the time that one happened, it was basically too late. But from a structure perspective, because it kept rejecting that green line, if I had drawn that in, that would have been my clue to get out and just give up.
Yeah, no, I've been staying away from USD pairs for the most part lately. So
Yep.
like
call.
USD and JPY and yeah.
Yep. You notice that I don't have, except for USD CAD, because I need to move it down there. I've been mostly following these two the last while because they've been trading better. I've moved all my USD this week down. The high and the medium and the low for me are back. I just lost the word. How much of my account I can trade. The 1 to 50, 1 to 200. Leverage.
Mhm.
So I can trade higher percentages on these ones here than I can on these. So these all allow me to trade between, on a single trade, the maximum I can trade on these is somewhere between 6 and 8% on a single trade of my account. These ones here are around 4%, and these ones are generally less than 2. So for me, GN, I have to use a 30 or 35 pip stop loss to even trade 2% of my account because the margin requirements are so high.
So then your risk
And
reward obviously has to be pretty good.
Yeah, exactly. And I'm trading on Oanda. And because my account with Oanda on the demo is registered in Canada, they only give me a 50 to 1 risk to
Leverage.
reward.
Yeah.
Yep. So that's one of the reasons why I'm simply not trading GN, and I wouldn't trade GU for a long time. I started trading a lot of the CAD pairs, but I've had to give up on most of those. So I'm stuck in at the moment with these two. Even GBP CAD hasn't been doing much of anything in the last while. It's been trading in this zone here for.
That's disgusting. I can't trade that. Unpredictable.
I look at that and go, yeah. I mean, here we have basically 3 days of do nothing, 3 days of do nothing. We drop 3 days of do nothing. We drop a couple of days of do nothing. You know, huge big candles in here. So
yeah.
To me, just not. I mean, here's my level 1. So from an ADR perspective, see what it's been doing for the last 1, 2, 3 full weeks has been trading in that 1.5 ADR zone. So Steve would say the market makers aren't trading that one right now. And I go, yeah, I would agree. But obviously the two economies are relatively on par, and they're just kind of hanging out and happy where they are at the moment. There's not a lot of incentive to move it one way or the other.
Yeah, like I was trading GJ there a little bit, and then lately it's just been trash. But then I found GN where it's been like, like I took a couple trades on GN. This was like 2-3 weeks ago on my last FTMO account, and then I hit one really good, but then I lost it all. It was stupid.
Yeah.
But then I kind of found GN as kind of, I don't know, I kind of forgot about GN, and then we happily got back together from our divorce, whatever you want to call it.
Well, when I was still on Einstein for the bots, after the big crash and a bunch of us lost all those margin calls, I threw GN and GA in and I traded them for 1 week. I was getting a little bit worried about my drawdown, but I added 20% to my account in 3 days because GN and GA at that time were, what was that? That might have been in here. They were just trading in this big zone up and down.
Hmm.
And the bots tend, if the zone is big enough and you can actually get the moves so the bots kick in, it's better off to having a ranging market over a couple or 300 pips than it is to have a trending market that never comes back. Because if this had been a bot, I've got, so here's GA. I'm in a bit of trouble on this one because I marked up my, so GA on my bot took an entry here and it took an entry here. Well, guess what? It's in a long-term upswing. It's not showing any signs of coming back anytime. And hopefully this daily level here, and that's a long ways back. We got to go to find, I don't remember how far back that was, doesn't matter, but we've been in a strong uptrend since early May. So the whole month of May basically has been in this uptrend. So if this doesn't reverse pretty soon, these two trades are going to take a big loss. So the bots don't like that kind of stuff when it never gets back. And AN generally goes nowhere. It's a very slow, steady pair. It tends to do a lot of ranging, but then all of a sudden with that stupid news, it had this big crash. So I put in a couple of buys. Fortunately, one of them is in slight profit, and I'm expecting because of this, that it's probably going to follow what GN did, and hopefully it's going to come
The only
back up
reason
and
that
get-
probably dumped is because of that news. Otherwise, I wouldn't have moved at all.
Yep. Yeah, exactly. It would have been hanging out in here somewhere. So I'd have probably, well, this entry never would have happened. This one might have, but CAD JPY, same thing. Did all this crap in here and then took this big jump the other day, like all the JPY pairs did.
Yeah, because GJ there, like you said there in our chat, went like 220 pips.
Yep.
Same thing,
That.
yeah. That's
Ooh.
crazy.
Yeah. So what could someone have been?
Was that news related then or no?
Sorry, was that what?
Was that spike there in price on JPY pairs? Was that news related? Because I didn't actually check.
Not that I could find, no.
Okay, I guess it had enough range and it finally decided to
There's
go.
JPY news that came out kind of in this time frame, and it was all medium impact stuff. But I couldn't find anything that caused that spike. I went looking for news and everything else, and I couldn't find anything at all.
They wanted to wake up finally.
And I've noticed that the JPY pairs have a tendency to trade consolidation and then make a big move one or the other. So look, it was the same thing back in here. Kind of this big consolidation and then boom, and then this big consolidation, boom.
Yeah, and
That's
then
why-
also you got your aqua on top too, so you'd expect a buy for the up move.
Yeah.
Yeah. Because you've been in an uptrend for what, 1, 2, 3, almost a month on GJ.
Yeah. So we stuck a Yeah, so we've been trading in that channel for quite a while. So we got touches here, all the way through here, 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 here. So you notice is that it takes relatively fast up and then goes into consolidation, then a big jump up, then long-term consolidation, big jump up. So it's probably going to hang out here at this daily level for a while. And then it's either going to come back down or it's going to jump and go again. I don't know, maybe Japan is intentionally keeping their currency low. Definitely encourage trade.
It's almost kind of like a bigger Elliott wave there too.
Yes.
The impulses up. Yeah.
So you got ding, ding,
Ping, ping.
ding. So we've had our three big impulses. So Elliott Wave would suggest that the future,
Sorry, 3 moves down. So
it's just, we're in that zone, but probably we're going to get an ABC correction and start to move down. This one, either come up for a double tap or we'll get to the same level and then on down again. But let's look at the 4 hour. How long has that trend been going? Yeah, see, I had a 4 hour.
look at your RSI too. It's ready to come back crashing in.
Yep. So we had a huge shark fin here because of that big movement. And now it's come back in with a signal line.
So as long as it stays below the signal line, you're going to continue on down.
Yep. So I did have a 4 hour channel across in here, and it followed that for a long time, and then bang, up it went. And I tend not to put a lot of stock in last year because it was basically COVID crash and then recovery back to previous levels for most economies. So I'm not going to go too much further back than here for looking for structure, but I've not been trading any JPY pairs, and the Voria Prime guys, at least on the gearbox, it's historically the JPY pairs are the worst performing because they do have a tendency to trend like this in one direction or the other. And the bots don't like that. Yeah, this was the one that I was looking at that on the daily. So again, just basic Elliott wave, but I just noticed this consolidation, big drop, consolidation, big drop. So I was looking for more drop in here. It didn't happen, but I did get a bit of a sell in here. But now it's either part of that same consolidation and then going to drop, or we're actually getting some resistance here and going to start moving up again because we were at the bottom of this 4 hour channel or close to it. It's never quite exact, but so we could end up finishing up down in here and then moving up, but it's already broke this channel that I had here quite substantially. So I'm expecting that more than likely it's going to head up. Plus is rejecting the bottom of the Asian range for the weekly.
This wasn't one of your new chops, was it?
So there we have a bounce back down to equal lows. And this green line, I had to go back a long time to find this support line in here. So that's how I overlay structure on top of Market Maker.
Right on.
Similar, but a different perspective. I like Market Maker because it forces me to look at the expected direction, basically from an Elliott wave perspective, but it forces me because I'm actually drawing out the levels and looking for potential either resets or reversals or whatever. So this in theory is a reset because it broke this low. And this was level 3 down here. I've seen a couple of different definitions. I've seen one that says if it breaks the previous level, then you've got a reset. And I think not Steve, but who's the other guys? The Forex market, the guys with the little cool blue Forex logo.
Oh,
Or something? No, what the hell is it?
it's on the tip of my tongue too.
Yeah, I'd have to look at my YouTube channel, but he just says basically if it, somebody said it
The
comes
market
down
maker
here.
method kind of thing.
Yeah, they trade Market Maker, but I can't remember their what their YouTube channel is. I have to look again. So this is because this was level 3 potentially. You could make a case for saying that no, this is your level 3. Because this here has now been broken. These have closed it. So structural wise it's broken that. So this would be labeled a reset because now we've gone below the previous low, peak formation low. Assuming that was a valid peak formation low, then we've broken that structure. So this becomes a reset instead of level 1, and the expectation is going to continue to drop. So we could get it coming down into this level here over the next week on this structure. So this could be a Monday, maybe Tuesday, and then start to buy back up again and then start to drop. And obviously that one was wrong, because I was looking at this zone here for rejection back up, because this had rejected here off this zone. It didn't happen. So I lost that one. I only threw a little bit on that one because I wasn't all that confident in it. I had this big W in here, multi-day W, so I thought, yeah, it's going to go back up, but you can see from where my stop loss is. I caught the top of that candle. They're doing on the 15. Yeah, so I got this little W in here, also this, so it's kind of a 22 trade. Expecting it, I got the crossover here, coming back up again. I hit the entry right at the top of this little candle right in there. And I never got in profit. So 2 hours later, I was dead. So I think that was a reasonable entry, but assuming my levels are correct, that's the part that I still struggle with, was this part of level 2, and then this is all just a big level 3 now on the way down with a big Elliott wave retracement. So maybe this, go back to the 4 hour. So we haven't broken this peak here. So this is up, up, and still in theory on the way down. So this is just all part of the, we had 1, 2, 3 impulses from this point here. Boris, how accurate has your tool been in terms of predicting the peak formations and the resets?
Yeah, I haven't really been using it so super much, but like it basically it looks for a peak, and then if something moves off the like if it moves in the other direction, like a whole ADR,
Yep.
then it'll say that's the new peak formation. So it'll never give you the exact peak formation. It's basically, it'll set you up for a safety trade or something like that.
And it probably needs a certain amount of price movement before I can say, yes, that was. So it's probably more in hindsight to give you a day later that, yes, that was. So if this was a reset in here, it's going to wait till it actually breaks this low before it says, yep, that was a reset.
Yeah. Well, actually, it doesn't even say. It just says this is the peak and don't trade away from it.
Okay.
So it's kind of like a simplification. Like if you don't know levels and how to mark and whatnot like that,
Yeah.
then yeah. But
so it's more trying to predict the peak here, the peak there, the peak here, the peak here for your big waves.
yeah, like if something went, if something's above like 3 times ADR, it'll start flashing like gold or something like that, and just to say that a potential reversal can happen. Not doesn't necessarily happen. Sometimes some of them are on like a 15-day peak formation high, like so there's not necessarily 3 days. But yeah, it's not bad. It kind of gives you a little bit of confluence, but I don't trade on it specifically just because there's so much to put together to get your trading to work.
Yeah, exactly.
So, I mean, I've been going through that BTMM study. Have you guys checked out that?
I keep getting lost in it, but I have to figure out, because I know there's a lot of good material in there, and you've mentioned it a couple of times, but I haven't spent any time in it. I'm part of the channel, but
Yeah, if you just start at the top and then just say like download one of the Flash, and then it has like basically all of Morrow's courses, like the 2012, like the whole thing,
okay.
not just the ones on YouTube that are. So like I went through the boot camp. It was 4 days, it was 4 hours each, and then I'm going through the actual course, and then there's other people who add a lot of other stuff, and then they got, oh, good Lord, it's just an
Yep.
abundance of information. It's a little bit overwhelming. So it's just like, it's kind of like hearing the same thing I've heard over and over and over again. But it just, he explains it quite well. He
Yeah.
runs on a little bit, but he explains the nature and why things work the way that they do. And
Yep.
basically, he's using those second leg entries, and he'll only go for 50 pips, but he'll be throwing 50, 100 standards on it.
Yes, exactly. And that's where I want to get to, that I'm confident enough that instead of putting 2% on 2 or 3 trades, I can put 6% on one trade and be done for a couple of days.
Mm-hmm. So yeah, so
Maybe
he's not
for
saying
the
you
month
don't
in
have
one
to
trade.
For a month, yes. What you did with your FDMO type.
Fuck.
Yeah, so it's also on like stop losses on like like if you're gonna take the first leg, then you got a 23 pips stop loss below the low.
Yeah.
And then if you got the second leg, then you only got to put a 7 pip stop loss below the low, and from there it's a high probability. He says like 80-90% that it will work out. But it's still, sometimes I still find things that can just throw me off, and so it's just blending it all together where it's just gonna make 100% sense. And then because before I was always waiting for the shifts to happen before I get in. It's like I can't get in before a shift. Well, you can. If there's a candlestick pattern there, then you can.
Yeah. And that's
But
what
it's
I'm trying to pay more attention to, is the candlestick patterns also, that get in earlier.
Mm-hmm. So that way, a lot of times you get in after a shift, and then it pulls back down. Then you're in agony for
Yes.
quite a while, as opposed to just on that. If you hit that second leg candlestick pattern and you're in,
Yeah.
it doesn't work
Yeah.
all the time, but when it does, and he also sets up that basically that 2-hour rule. If you're not in significant profit on that second leg, then you might want to think about scratching it. So
Yeah, that's a good idea. It's kind of what the IML guys were doing too with their DeLoreans. If you weren't in profit in 90 minutes, then get the hell out.
yeah, they're good over there. It's just there's a lot of I don't know. It's basically just Morrow's. It's all Steve Morrow's stuff, and they all just ripped off all of it.
Yep.
And he kind of goes a little bit more in detail on it, and he's just more. There's the fine edges, right? I think the engulfing candle pattern, that's all Tyrone's, but I mean,
Yeah.
was that like 39% accurate or whatever? But you still make money.
Yeah. His signature DeLorean. Yeah, he's picked one part of this whole market maker and built everything around that one part of it.
Yeah, but
Well,
I don't.
They don't even talk about it like in DeLorean. They don't even talk about like resets or peak formations or none of that.
No, and his explanation of the whole weekly cycle and 22 trades and that kind of stuff, I was totally lost.
Well,
And then
that's also too why he doesn't trade Mondays and Fridays. Those are trap days because if you're gonna be in a bullish or a bearish cycle. So if Aqua's on top of the 1 hour, you're gonna be looking for buys, and then it's predictable, right?
I almost feel like he doesn't give you all the information because then you're going to be dependent on him, so you'll keep paying.
That was my theory. They have all these indicators and all these little tools and charts, and the same thing with Manny's
Kiona's there.
yeah. All the
Yeah,
little,
it's interesting because it's like
that was it. The harmonic patterns.
patterns, yeah. Yeah, and apparently they're using it on that BTMM study as well. Like once you get to the more advanced parts, Sean went through it on some other stuff there too. Like they go through what is it? One of the courses. Once you get through like his main course, then they'll have that
Charter school.
the charter school. Yeah, there you go.
Yeah.
And I think they're using like harmonic patterns to add into that. I'm like, I don't even know. Like it's funny because like I've done like literally about 5 market maker courses.
Yep.
I did
Well-
Tyrone's, I've done the market maker with Nick, I've done Jeff Kirkland, I've done
There's a nice bat pattern right
Shift.
here,
yeah.
which says you're going to get a reversal. But sometimes these reversals, I mean, yes, it did, but it only went 20 pips before it crashed.
Mm-hmm.
There's another one in here. And the problem I have with the harmonics is, okay, they're all basically look like this. Oops. Well, let me just draw one. So all the harmonic patterns basically look like some form of that.
Mm-hmm.
It's like, okay, well, depending on the ratio, we call it this. And if the ratio of this changes, then we call it this. And if the ratio of that changes, then we call it this. And it's like, why do you care? All you're looking at this point and saying that this would give me a reversal. So why do you care what the ratios are here? And have to come up with a name like bats and everything for all these different patterns. Because if it's like this, then you go, oh, we got us a bat pattern. It's like, okay, but you're still looking for a reversal off this point. And the
Yeah.
other thing that they didn't do a very good job of is I stopped looking at all of them and only looked for the ones where the reversal was going to be in the direction of the trend. So if the trend was in that direction, then I would take this.
Yeah.
What I now see based on market maker is that what often happens is you're getting this kind of thing here and then it goes. So they were looking for entries in here all the time, up in here. And 90% of the time it put me in drawdown down to here. And we were looking at stop losses just a few pips below this point, but often the second leg of the W comes down a little bit. So I was always getting stopped out and then it would take off.
Well, that's
Yeah.
just like what happened on GN there on Thursday on the reversal. It went a little lower.
Yes.
That's exactly where
Yeah,
I kind of
exactly.
got out.
Yep.
Exactly.
I had
what
it at like 360 and then I haven't been managing my sleep, so like I couldn't. I literally fell asleep, and that's happened 2 times already. Where I would have like had I just been there for that and with a clear mind, I'd have probably beaten the verification twice over, and I've just been missing it, and I just couldn't feel like I could chase it after it ran 60 pips, which I probably should have just done. But
Well, that's what I did on Thursday because I was dead to the world sleeping at 4 a.m. when they pinned the low, and then I was just like, I woke up at like 6:10, and I was just like, fuck. But then I saw it go on the 1 hour. I'm like, okay, well, as long as these EMAs don't cross, I can look for an entry, and then.
yeah, and I was hoping I'd get some sort of a pullback, but just
because I traded a bunch because I was waiting for that midweek reversal, but I was in early before it pinned the low, and then I regretted that, and then I lost like $800 or $900 on my challenge between entries and exits, and then I made it. Fortunately, I made it all back when I put a 3 lot in, and I ended up getting it back. So
Yeah.
I'm about $4,700 up on my challenge at the moment. So.
yeah, I got another
3
2
days,
weeks, and
so I still got 27 days and 5,300 to go. So
Structure wise, what the structure boys would have been looking at is for for another entry on that is, so here's basically the neckline of the W, it broke it, did a little retest, a couple candles later, and then was gone. So from a structure perspective, this would have been one way of looking for another entry on that. Yeah, you missed this big candle up here. But that was a good entry in there. Now, because this was such a big push. You may not have expected it to go very far because we were already, basically into New York, where we expect maybe we're going to get 20 or 30 pips on a move, but this one kept going.
Yeah, because once
so-
we were above the aqua, I just ended up targeting like the Mayo, so that's why I ended up targeting.
Yep. Yeah. And that's when you basically throw something at it and don't bother with the stop loss.
No,
Okay.
I put a stop loss. Yeah. Not too tight though, a little loose.
Yeah.
Yeah, and well, sometimes what I find with this pair is that, well, maybe because it's in Asia, like sometimes it'll just move specifically just right through Asia, and it won't give you any kind of warning. A lot of times I'm waiting for London to start, and then the A range is already like, I don't know, 100 pips. So I'm like, technically, I'm not supposed to trade anything like this.
Yeah, but that's a good point, Boris, because the Asian pairs, especially odd and NZD, do have a tendency to move more because the Asian markets are open, the Asian pairs, and so people are trading them. So it's and someone else, some other video I was watching in the last week said the same thing. The Asian pairs, if you want to trade the Asian range, trade the Asian pairs. So JPY, NZD, odd, trade those 3 pairs if you want to trade the Asian range.
I don't know,
Because you do tend to get the bigger moves on those ones.
yeah, I mean, I like outside of exotics, I don't think anything. I haven't seen anything that moves like that.
Yeah.
So I guess,
Here-
and it plays out pretty well, but I mean, it's also been, it's played me sometimes, or I've played myself, but
Yep.
But
So if you had entered here on this pullback, even with a 20 pip stop loss, you'd have still been looking at a 1 to 8 risk to reward on that. So that would have been a pretty sweet trade.
yeah, yeah, it's just, sometimes it's just like it's managing your own emotions. You get a bit rattled, and then it's just like, I can't get in now. I gave it up. But
Well, that's why I go, okay, so it's too late from a market maker perspective because we get this big ass candle, but what's structure doing? So structure said we just broke this level through here. So top of the candle, top of the candle, top of the candle, piece, broke through, retested, and then off we go again. So even if you caught the entry here, you'd have still made a 3 to 1 risk to reward or something, keeping your stop loss down here. You'd have still made it. So yeah, you missed the market maker entry down here because it wasn't really a good one unless you happen to be looking at the 5 minute and you went, yep, that's the stop
Low,
hunt.
boom, you're good.
No. Yep. You hit the, I mean, Ty, you did that on, was it on GN again, like 3 weeks ago?
Yeah, same thing.
It did this and you basically waited for a 5 pip movement on the way up and you jumped in.
Yeah, and then
In that case, it went up, it came back down a little bit and then boom, off it went.
he took off and
Yep.
pretty good.
yeah, it's definitely like being comfortable with potentially going into some drawdown, but have it if you have your levels right, and
Yep.
Mm-hmm.
do you just say, you know what, this is my trade, or this either I'm going to hit stop loss or I'm going to just
Well, see,
let it run.
what happened was on not the challenge I'm on right now, but the one before, I panicked in a retracement, and then this time my emotions were in check, and then I was good because I was in it was like 88 pip retracement, and then I got out at break even, and then the next candle on the 1 hour. This is on GJ, like maybe 3 weeks ago, like a month ago. And then it absolutely, it retracement, but then I panicked because I saw in the 1 hour, because it went all the way down there, retraced in the 1 hour, and then continued to go all the way back down. But it didn't dawn on me at the time because my emotions took over, and then that it was a retracement on the smaller time frame, which it hit the 618 retracement and then continued on down.
Yeah.
And then it's just But I'm kind of beyond the emotional. I'm getting better at the emotional part. Like, okay, just your analysis is all good, and kind of continue on, kind of thing.
Yeah,
so.
it's more about trusting your analysis, and then a lot of times my emotions get over, and I'm like, oh no, I'll get out, and then maybe I'll get back in. And it's just just get in, and I'm not going to say walk away from it, but you know,
Put your stop loss
Calm
profit.
down.
Let it go. There you go.
yeah, they say like after 30 pips, put it into profit, and
Let it go. Yep. Well, this one
especially
here
if you're in
was,
a peak,
Yeah.
especially if you're in a peak or something like that, you know, that could pay out. I mean, eventually I'd like to be more of a swing trader, you know, but
this is one example of where I didn't really pay attention myself to structure. If I had been, I'd have stayed in this trade. But I was at 6% here, and I contemplated getting out. But with this, I expect that it was going to come back, and because this was the midweek reversal with this basically 3 hits to the high, big M, and I caught it in here. I went in. If I waited to the next morning, it would have been fine. But I was afraid that because we were basically already 3 hits, that it was going to start to drop through the Asian range, and it didn't. I'd have been okay waiting here, but I still got a slightly better entry because on the 15, my entry probably would have been somewhere in here. Wait.
Yeah. And then
So
you
it
broke
was a
the
little bit
aqua there
messy in
too.
here.
So yeah.
Yeah, this mess, you know, like Steve says, if you haven't broken the high, he counts all these as these are multiple hits to the high. So if it hasn't broken that after 3 hits, you're in and you're going to the bank, which is exactly what happened. But so I took these as 3 hits to the high and said it's not going to go anywhere. And I entered and I was right. But because I wasn't paying attention to my own little structure, I didn't have this line drawn. So I panicked on this retracement. I thought, well, I got 4%. So that's, you know, for me, that's still an excellent day, is getting 4%. So I let it hit my stop loss there. And then after I went back and looked at it and go, well, that was dumb. I had a support line there. This was the end of the day. So I just kind of after about here, I exited on this retracement coming up here.
mhm.
I got out right there. But if I'd been paying attention and it had this line drawn, I'd have been waiting for this to drop. And I'd have stayed in. So that's again how I use structure to confirm whether or not it's going to retrace any further. It could have potentially come up to here, but it actually, this was really the break of that. You can get carried away with your structural lines, but you're looking for the things that are saying, is it going in the other direction or is it going to keep going my way? You know, like that one night, Boris, where I said, no, stay in because you're going to get your 3 impulses for the day. I think you were trading GN on a buy or something, and Tide got out at the EMA, and you were trying to break your FTMO and you missed it by like 5 pips or something.
Yeah.
So if you're paying attention to structure, then you've got a much higher probability of being able to ride it out for the rest of the day. So 1, 2, 3 impulses for the day. Now, in this case, it just kept melting. So the 3rd impulse actually ended it down here and we got a 4th one. But if I had stayed in this one and ignored this, that would have been a super nice trade. I could have taken a 2nd entry in here and doubled up on it. So I still got 6 out of this one and 4 out of this one, still 10% over 2 days on that one.
That's good.
I'm still happy with that, but I could have stayed in just this one and had 13% instead.
Mhm.
Yeah, you know, it's adding everything together, but you know, like I mean, the possibilities on this business is endless. So
Yes.
And really, I've only been doing this for a little over a year now. So
Me too.
Yeah.
It's only been a year and change.
9 months in?
I
Is it-
started end of last April. So
Yeah, I joined IML in the middle of July. So July, I was just throwing stuff at the chart to see what stuck, not having any idea what I was doing.
mhm.
And then August started the intensive learning, and I have to get back. So I want to start doing some of that Beat the Market Maker, and that guy that you posted his video of, Ty, I like his stuff. He's got a lot of other videos too that I want to take a look at.
who that Burke guy.
Yeah.
Stacy Burke.
Casey Burke. Yeah, I don't understand the quarter theory, so I got to do some work on that to kind of get the idea of it. But he went through on that video. He went through pretty fast, saying, "Okay, well, we got this zone in here now, so 50% from here, so you can expect this. And oh, now we got this zone, the middle of it here, we can expect this. And look, we're at the 25% here, and
He's got a
he
ton of
gets
video.
going and going, yeah, okay."
Yeah, he's
I-
got a
I just
load of
need
videos.
something- Yep.
But yeah, no, it's been really good. I gotta bear down and try to get back my verification here because I need to make $2,000 in like the next 2.5 weeks. So I just got to find the nice clean setup, and
Yep.
really on a 2 lot, it's only like 100 or so pips or something. But
Oh, okay.
so
I figured my challenge out. It's like 200 pips on a 5 lot. You pass a 100K challenge.
yeah,
When-
yeah, I know it's just adding everything together, and then I mean, if I lose it, I'll probably end up going after another one. But then maybe I'll use something bigger than a 25K.
Yeah.
Got big aspirations, you know. But this is,
Absolutely.
but no, this was really good. You know, I don't know if you guys would ever like to do a live trading Zoom or like maybe a daily market review or something like that, maybe before a session.
Absolutely.
It just, you know, sometimes it'd be nice just to be able to bounce things off ideas. I love that we, you know, sometimes post our setups and stuff. But you know, sometimes if, you know, getting another fresh set of eyes on something may help, since we all are doing essentially market maker, you know, a bit of structure and whatnot, but mostly I'm just doing market maker. But
Yeah.
so
No, I agree. The more setups we post of our own stuff, so we can see what other people are doing and talk about it. Or, I mean, Discord has got live voice and live video, so there's no reason why at 1:30 in the morning when you and I and Ty are still awake or just got up that we can't turn on the voice and have the same conversation every morning.
yeah,
If I'm up. I usually got like one eye cracked and I'm like, "Ugh."
Yeah.
I know. It kind of affects your trading too when we're doing that. And
I'll be up till like 2 or 3 and then I'll crash and then wake up at 6 and then go to work at 7 and sleep for 3 or 4
Yeah.
hours and oh my god.
I know. It's
The life of a trader.
I've been trying to cut down my hours as much as possible, and well, thank God I have the government assistance, because I've just been using that and just learning a new skill while I'm on that. So, but that's gonna end relatively soon here. So I got to get my stuff together here and to start pushing on that. But I don't know. It's been good learning this, and I'm actually driven to learn it and understand it and make money off of it, and really just be able to do this and then move somewhere where it's nice and warm all the time. I'm thinking Hawaii is a good place, and then you can just start trading at 9 o'clock, then be done by 2:30 and call it a day.
Yeah. You got to go somewhere where the time zones fit with London.
Yeah. So somewhere around Hawaii, maybe a little east of there.
Yep.
Something. But
I don't think there's anywhere really east of Hawaii.
oh,
LA.
west. Sorry.
Yeah. Hey, no, you go to Guam or Fiji or something stupid, or that'd be cool.
Yeah, I hear Fiji's nice.
Fiji or,
So
or like
Newfoundland is a little bit
Bora
closer.
Bora. Hey, there you go, Bora Bora.
Yeah.
Hey, Boris can go to Bora Bora.
There you go. That's why they're just waiting
triple
for me.
B. The triple B.
You're gonna have
Boris and
to
Bora
make
Bora.
you're gonna have to make a fortune to afford to live in Bora Bora.
Oh yeah, it's expensive there. Oh, Hawaii, I know Hawaii's pretty expensive too. But
Yeah, Hawaii is, but not. The Fiji Islands are just horrible. I was there years ago with a buddy of mine. We found a really good deal on a Club Med and went, and so that was cheap. And we hung out on the island, and we were on the island of Moorea instead of Bora Bora, because they have used to have two Club Meds there. But my best friend and his wife went on a cruise 2 years ago into that area, and he said like coffee was $7 for a little tiny thing of coffee, and a hamburger was $25, and he said it was just absolutely ridiculous.
Yeah. Well, that's what nice. That's what nice. Maybe like the Philippines or something like that.
Well,
Cheap
Newfoundland's
over
a
there.
half hour closer to London.
Yeah.
Where are you, Boris?
No, I'm in Edmonton, so
Okay.
yeah, so
That's right. An hour.
the mountain time.
I'm on
So you get to
Vancouver
Newfoundland, you're
Island. That's where
closer.
I'm at.
Yeah. Ty's on the wrong side of the country.
Yep. And where's Sean, in Calgary or where?
Yeah, I'm in Calgary.
You're in Calgary.
Yeah.
What's Calgary looking like these days from an economic perspective?
I don't even know. I'm actually just I'm just outside of Calgary, and I never go there, and I don't pay attention to anything.
Yeah.
I'm fully Forex.
I've still got friends that have been out of work for 5, 6, 7 years, geologists and geophysicists and all sorts of stuff. Not a pretty picture of office space. It's, I think the vacancy rate downtown now is somewhere around 50% or worse than that.
Oh, it's rough. It's rough. Like, I mean, I where I live is right by Nisku. I don't know if you guys know where Nisku is. It's just about outside. I mean, it's like it was like the big oil hub, right?
Yeah.
Yeah.
And now it's just abandoned buildings, and it's just sad from what it was to what it is now. And, you know, they're demonizing an industry. I'm like, okay, well, what's the freaking alternative right now? You're just going to turn everything off, or? And it's upsetting. Like I get where people are coming on climate change and whatnot, but you know, this is also people that I care of in their lives and livelihoods, and you know, it's and my family as well. They're in the steel fabricating business, and you know, my dad's owned that place for years. My brothers worked there, and it's just the business is not nearly what it once was, and this was not even that long ago. So it's tough to say.
Yeah.
So,
And no one seems to care about finding a bridge or a transition from where we're at. And, you know, I grew up in the oil and gas, so in Calgary, looking at, you know, and I go, okay, guys, the writing's on the wall. There's enough of whether the math is behind the climate change or not.